It's over, stocks just topped, and the mother of all crashes comes next. I have all the details and what you need to know right here in the video, so let's get right into it. Well, the stock market actually performed pretty well today, but it was nothing more than an extension of a pathetic bear market rally. So in this video, I want to share with you what I'm currently looking at and what I'm going to be watching going forward in anticipation of the next major move lower. Now, I like to look at the four major indices as represented by their respective ETFs, including the DIA, which is the Dow Jones, the SPY, which is the S&P 500, the QQQ, which is the NASDAQ 100, and the IWM, which is the Russell 2000. Now, I do want to get into it and talk about the performance of all of those indices today, but I also want to look under the hood and see some of the warning signs that are being flashed right here, right now in front of our face that is actually giving us a little bit of a warning sign showing that this rally is likely over and the next leg lower is probably coming in really quickly here. So let's quickly talk about the performance of these four major indices today. Now, as we look at the DIA, that was up 1.14%. Meanwhile, the SPY was up 1.5%. The QQQ was up 2.13%. And the IWM, again, the Russell 2000, was up 2.36%. Again, looks pretty nice, right? I agree. When you look at it at surface value, it does look like, hey, the market did pretty well today. It was up a little over 1% for the Dow Jones and about 2 1/3% for the Russell 2000. Sounds pretty nice. However, let's take a quick little look under the hood here and see what is the actual performance of these indices actually doing, again, represented by these ETFs, because here's the thing. As we continue to move forward with this rally, if this was actually a rally followed up by conviction, in other words, investors were jumping in behind all this and actually believing in this current rally right now, as in the bottom was put into this market, we would be seeing increasing volumes. However, here's the problem. We're seeing decreasing volumes. On a big day like this, where the market is up anywhere between about 1 1/8% all the way up to 2 1/3% across the IWM, we should be seeing increasing volumes. In other words, more people jumping in, supporting this rally moving higher. We're not seeing that. We're seeing decreasing volumes, which is a major warning sign looking at these indices and the market as a whole that is showing this rally does not have conviction. In other words, people are not believing in this rally. This is nothing more than a bear market rally, and this is where those bear traps come in because it sucks people in on big days like this where they think, hey, the bottom is in, this is great buying opportunity, and then all of a sudden they whip this thing the opposite direction, and then you get trapped, right? Kind of the definition behind a bear trap. So anyway, we can talk about that more in a separate video, but let's quickly dive into it a little bit deeper here, and let's talk about some volume now across these indices. Now again, I'm just going to kind of round some numbers here, but again, just to kind of give you a basic idea of these indices. Now generally, I don't look at the Dow Jones all that much as far as volumes, but again, let's just throw it in here for just a quick example to show you what we're actually looking at. Now, when it comes down to the DIA, again, the Dow Jones, generally an average volume is about 4.4 million shares trading hands every single day. Today, it traded 2.2 million, 50% of what the daily volume typically is. Okay, but that's the Dow. I mean, realistically, who really cares about the Dow? I mean, let's be real with ourselves. It doesn't really represent all that much. We want to watch the other three, the S&P, the NASDAQ, and the Russell 2000. These are the three that actually give us the indication that we need to watch to give us a better sense of where the market is going. Let's jump into it a little bit further here and talk about the details. The SPY, which by the way, this is a very heavily traded ETF. I trade it all the time. It's a very heavily traded ETF, and it trades on average 109 million shares every single day. That's a ton of volume, right? Here's the thing. Today, it traded 64 million shares, so about 45 million shares less than what it typically does on any given average day. That's not conviction. If this market was going to be moving significantly higher, and if this rally was truly intact, that rally inflation should be significantly higher. We should not be looking at volume 64 million when the average daily volume is doing 109 million. That's a major warning sign right there. Next, let's quickly look at the QQQ. Again, this represents the NASDAQ 100. Typically, on a daily average, it does about 77 million shares. Today, it did 56 million. Again, 21 million shares less than what it typically does on any average day when it was up 2.13%. Does that make sense? No, not really. Again, it was up, but again, the volumes were very light in comparison to where they should be with a rally like this that should have conviction behind it. It doesn't. All right, now let's look at the Russell 2000. The Russell 2000 generally trades about 32 million shares. Today, it traded 24 million shares. Again, 8 million shares less than what it typically does. Again, these are just one simple factor here that I'm going to look at. Now, I'm going to be honest with you. I'm not a huge volume person. I don't really look at volume. However, when it comes down to moves like this is something that you want to look at because it gives a very clear picture of what this rally is actually doing. Like I said earlier, in the case that a bottom is put into a market and we're starting to see a rally move higher, you should see increasing volumes because more and more people are starting to jump on the bandwagon and starting to move prices higher. We're not seeing that whatsoever. We're seeing decreasing volumes, especially on a big day like this where the market is up anywhere between 1 and 2.33% depending on the indices. We should be seeing a lot more volume than this. This is a major warning sign going forward. Here's what's interesting about it. Right away tomorrow morning at 8:30 a.m. East Coast time, we're going to be getting the non-farm payroll number for the month of June. Again, this is likely going to be a major catalyst to move price. Now, here's the thing. If you watched any of my other videos, here's what it comes down to. News is nothing more than a catalyst to move price to where it was going to go anyway. The market simply moves on supply and demand. News is nothing more than a little bit of data to move prices more quickly to where they need to go. So let me tell you what I'm doing right here, right now, and what I'm going to be watching for going forward. Today, I shorted the market. It was a pretty good and a kind of a fun time. So about a week ago, the market actually was in a little bit of a rally mode. I was in there shorting the market as well. The market went down a few percentage points. I exited out of those positions. Again, I jumped into a couple longs. I rode it for about a day and a half or so. I exited out of those positions, which, quick little side note, I piled into oil yesterday. Ooh boy, that was a good trade, yeah. So yesterday, as oil was falling off a cliff, I piled into oil because I saw capitulation, as I talk about in so many of my videos. Watch for the capitulation. I saw it in oil yesterday, and I jumped in, and boy howdy, that was a nice trade. I'll tell you that much, okay? So that was a fun day today as oil was shooting significantly higher, which, by the way, I exited out of my longs in oil. But yeah, it was a pretty nice payday. I'll just tell you that much. So anyway, pretty cool day. But my point is, now that we're looking at the current market right here, again, this rally today to me was a great shorting opportunity. That's exactly what I did. So to be totally honest with you, what I do, I love trading the Russell 2000. This is my jam. I typically trade the Russell 2000. Every so often I do jump in and trade the SPY or the QQQ, and sometimes I do jump in and trade some of the other ETFs out there, like what I did yesterday with that oil trade coming in and that I held through early this morning that I exited. But anyway, I strictly trade ETFs for the most part, and then some of the longer term positions that I do hold are in some individual stocks, but when I do short term trades, it's all for the most part in ETFs. But here's what I'm saying. The whole fact of the matter is, today, to me, in my opinion, the things that I was looking at today presented an amazing shorting opportunity. Again, now here's what I anticipate going forward tomorrow. The non-farm payroll number is probably going to be a pretty bad one. For whatever reason, it's probably not going to meet expectations. For whatever reason, they're going to find bad news about this. I would not be shocked one bit to see a nice spike higher in the pre-market, and then all of a sudden, throughout the day tomorrow, see a major sell-off in the market. Am I going to be completely 100% correct? I don't know. Only time will tell. But here's what I anticipate. I've been watching the markets long enough for now. I've seen this happen time and time again. You see a major spike either direction in the pre-market. The market maybe opens higher to suck a bunch of people in, and then all of a sudden they pull the rug and the whole thing collapses onto itself, and it collapses all day long. You've probably seen this too if you've been watching the markets for any length of time. So again, if the market happens to open up higher tomorrow and maybe rallies up a little bit more, you better believe I'm going to be back in there shorting the market once again. And does this mean 100% that I'm correct? No, not necessarily. I'm not right all the time. In fact, I'm only right like 65 to 70% of the time. That's totally fine, right? That's the thing is when you do investments and you trade in the market, you're wrong quite a bit of the time. But the fact of the matter is you got to make sure that the winners outpace the losers by 3-to-1, 4-to-1. You got to go for the really big ones. But again, we can talk about all that in a separate video. The fact of the matter is, this current rally that we are seeing right now, in my opinion, based on what I am currently looking at, is nothing more than a super pathetic bear market rally. And then we're going to see a major leg move lower. Like I said earlier in the video, the next mother of all crashes to come in and wipe this thing out. So this rally that we've been seeing here over the last week and a half or so now, it's been really muted. It has not been a rally followed by any type of conviction. If a bottom was really put into this market, we'd be seeing a much more convincing rally coming out of this market. It's not doing a whole lot of anything. And generally, let me throw this out there as well. Generally, when you see a rally starting to come in, it kind of just grinds away, moving higher and higher and higher a little bit each day. And then all of a sudden, after days and days and days of rallying, again, it could be going up 0.5%. Just the fact of the matter is just the market moving up a little bit day after day for long periods of time. And then all of a sudden you see a big move higher after several days of going up. That's a key sign right there that is typically a top in a market. Same thing happens on the downside. Market goes down and down and down and down and down, and then all of a sudden you see a huge day down. Again, capitulation. When you watch for the capitulation, that is a huge sign it's time to jump in. So either jump in typically the opposite direction, which by the way, today I was kind of seeing today possibly could be a little bit of a capitulation move on the upside. Now, generally capitulation on the downside is way more easy to spot than it is on the upside. But generally what I saw today looked to me like, this looks really suspicious. A bunch of days going up day after day after day, and then a big move today with really pathetic volume, and there's no necessary need for it. Tomorrow, I would anticipate, again, with the non-farm payroll number coming out right away in the morning, again, it's going to be a little bit of an interesting opportunity, but I would anticipate tomorrow, the market's probably going to sell off almost all day long. That's going to be my anticipation. If the market opens higher or if it rallies higher, I'm just going to short it even more. And again, am I going to be right or wrong? Only time will tell, but this is my anticipation and this is what I'm watching going forward. And again, I want to throw this out there as well. I would anticipate this might possibly be the last breath in this market before we see the next major leg lower. So we're still kind of oscillating around this bear market territory. We just kind of finally dipped into it again a couple times throughout the year so far. And realistically, generally the first major leg down in a bear market is kind of like the warning shot, right? They kind of come out and they say, hey, check it out, everyone. We're taking this thing down. And then they give a little bear market rally. And then that's your opportunity to either get out of positions and or enter into short positions for the next leg down. And that's usually the really big one. So again, that's my anticipation. That's what I'm watching right now. Again, as I like to say in all my videos, only time will tell. And I guess we'll have to see. We'll have to come back to this video here in the next few days here, in the next couple of weeks, and see, was I right or was I completely wrong? Again, only time will tell, and I'm just letting you know what I anticipate tomorrow, and it'll be interesting to see what happens. Maybe I'll come back and give you an update tomorrow, but I'm sure you'll probably be watching the videos and the market as well. So anyway, hope this one gives you a better glimpse into what's going on, but again, based on everything I'm seeing right now, this rally we are currently experiencing right now is nothing more than a bear market rally. When this thing tops out, again, look out below. With everything going on and the manufactured crash coming in by the Federal Reserve, it's going to be a good one. Anyway, hope you're doing well. Please make sure to subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the other thousands of videos right here on the channel. Enjoy your day, and I'll catch you again later in the next video.